Hello and welcome. This is Notibot ENG. I'm your anchor today, bringing you a recap of the latest developments in the ongoing US-Iran conflict. With oil prices surging and tensions escalating, the global energy market is on high alert. In this special report, we'll take you through the latest trading numbers from BP, the latest updates from the front lines of the war, and the impact of the conflict on the global economy. From the Strait of Hormuz to the world's top exporters, we'll examine the key players and the consequences of this escalating crisis. As tensions escalate in the Middle East, one energy giant is riding a wave of exceptional trading, capitalizing on rising oil prices. The global energy market is experiencing unprecedented volatility following the US-Israeli war on Iran, which has led to a significant increase in oil prices. The conflict has triggered a sharp rise in oil prices, with Brent crude rising from around $61 a barrel in January to over $119 a barrel several weeks ago. This has had a major impact on energy traders, who are navigating significant market fluctuations. BP has reported that its oil trading result is expected to be exceptional in the first quarter of its financial year, with analysts upgrading their profit forecasts. Citi has raised its estimate for BP's adjusted net income in the January to March quarter by 20% to $2.6 billion. This increase is largely attributed to the company's trading in the energy market. The International Energy Agency has also been affected by the conflict, cutting its forecasts for global oil demand this year. The agency warned that supply and demand would both be reduced by the conflict in the Middle East, leading to a decline in oil demand of 80,000 barrels a day. This would be the first annual decline since the 2020 COVID pandemic. Analysts at JP Morgan Chase expect oil prices to stay above $100 a barrel in the second quarter, while Goldman Sachs has reduced its forecast to an average price of $90 from $99 a barrel. The impact of the conflict on the energy market is significant, with oil prices playing a major role in the global economy. The increase in oil prices has had a major impact on energy traders, who are now navigating significant market volatility. As the world struggles to comprehend the escalating crisis, we take a closer look at the situation on day 46 of the US-Iran conflict. The conflict between the US and Iran has entered its 46th day, with tensions escalating further. The US imposed a blockade on Iranian ports, targeting shipping through the Strait of Hormuz. However, President Donald Trump has maintained that there is still a chance for Tehran to reach a deal. The US blockade has been met with widespread criticism from Iran, with the country accusing Washington of piracy. Thousands of people took to the streets of Tehran to protest the move, with chants of death to America and death to the US president. The protests demonstrate the significant opposition to the US's actions, which have major implications for global energy supplies. The blockade has also sparked concerns about the impact on regional stability. Israel has intensified its invasion of southern Lebanon, further straining relations between the two countries. The situation in the region is volatile, with multiple parties involved and competing interests. Diplomatic efforts to revive US-Iran talks are continuing, with Pakistan offering to host a second round of negotiations in Islamabad this week. The Associated Press reported that U.S. Secretary of State Mike Pompeo has expressed a willingness to engage in talks with Iran, but the prospects for a deal remain uncertain. The situation is fluid, with key players continuing to jockey for position. The international community is watching with interest as the conflict has significant implications for global security and energy markets. A major development has emerged in the escalating tensions between the US and Iran as a sanctioned ship navigates a critical waterway. The United States has enforced a maritime blockade on the Strait of Hormuz, a critical waterway in the Persian Gulf, as tensions between the US and Iran escalate. The blockade, which began on Monday afternoon, has significant implications for global energy markets and trade. On Tuesday, a Chinese-owned tanker, the Rich Starry, sailed through the Strait of Hormuz, defying the U.S. blockade. The vessel, owned by Shanghai Xianrun Shipping Co. Ltd., was sanctioned by the U.S. for dealing with Iran. This move is seen as a challenge to the U.S.'s authority in the region. The U.S. military has warned vessels that they will be subject to interception, diversion, and capture, regardless of their flag. This warning has raised concerns among shipping companies and governments around the world. Iran has responded to the blockade by threatening ports belonging to American allies in the Persian Gulf and the Gulf of Oman. The U.S. has been accused of violating international law by imposing the blockade without a UN Security Council resolution. The rich Starry passage through the Strait of Hormuz has significant implications for global energy markets. The U.S. is a major oil producer, and the blockade is likely to increase tensions with Iran, which is the world's third-largest oil producer. The situation is highly volatile, and further escalation is possible. As the situation continues to unfold, one thing is clear. The Strait of Hormuz has become a critical flashpoint in the U.S.-Iran conflict. As global markets grapple with the escalating Iran conflict, we're seeing a concerning trend in China's international trade, slowing exports. China's exports grew only 2.5% in March from a year earlier, a significant slowdown caused by the war in Iran. The closure of the Strait of Hormuz has pushed up the cost of materials, squeezing profits from many Chinese factories. This slowdown comes as China's economy continues to face downward pressure, with trade tensions with the U.S. and slowdowns in major markets such as Europe. The slowdown in exports is a worrying sign for China's economic growth prospects, with the country's leaders seeking to boost growth to around 8% this year. However, with global demand slowing and supply chains disrupted, it's unclear whether China can meet this target. The closure of the Strait of Hormuz has also raised concerns about the global supply chain, with many countries relying on the waterway to import and export goods. The impact of the war on global trade is still unfolding, and it's likely that we'll see further disruptions in the coming months. In other news, hundreds of Hollywood stars have come out in opposition to the acquisition of Warner Bros. Discovery by Paramount. The acquisition has raised concerns among many in the industry, with some worried about the impact on creative freedom and the future of entertainment. The opposition has been led by stars such as Leonardo DiCaprio and Julia Roberts, who have expressed their concerns about the acquisition and the potential impact on the industry. As tensions escalate, the world watches as the U.S. moves to strangle Asia's energy lifeline, crippling the global economy in the process. Good evening, and welcome to our evening news recap. Tonight, we're bringing you the latest on a growing crisis in the Asia-Pacific region. The standoff between the U.S. and Iran has reached a boiling point, with nearly 90% of the region's crude oil supply now at risk. Tensions escalated after Iran threatened to block all ports in the Persian Gulf and the Gulf of Oman, following stalled peace talks and a naval standoff. Iran's military and revolutionary guards have issued a statement, warning that no ports in the region will be safe. This move has sent shockwaves through the global energy market, with benchmark Brent crude prices hovering around $100 per barrel. The impact of this crisis cannot be overstated. The Asia-Pacific region's exposure to crude oil and refined petroleum products is concentrated in these key areas, feeding directly into manufacturing input costs, transport, and trade financing. This prolonged closure will not only raise energy bills, but also ripple through industries across the region. The U.S.'s decision to blockade the Hormuz Strait, a critical shipping lane, has been seen as a response to Iran's aggressive actions. The Iranian government has vowed to defend its sovereignty and interests, sparking fears of a wider conflict in the region. The situation remains volatile, with both sides dug in and showing no signs of backing down. The world is watching with bated breath as the delicate balance of power in the region teeters on the brink of chaos. That's all for today's news recap. Thank you for watching. We'll continue to bring you updates on the latest global developments. If you want to stay informed, please subscribe to our channel. We'll be back with more news and analysis soon. We appreciate your support and look forward to continuing to bring you the latest news from around the world. Until next time, good night.